Chewy CEO, Sumit Singh. It's great to have you back on the show, Sumit. Welcome.
Hi, Sarah. Nice to be here.
So the profitability was there, and that was applauded by the analysts, but it seems like the forecast, both on the current quarter and the full year, was a disappointment. What happened there?
Well, if you break down the quarter, Sarah, we actually feel really proud of the results, right? Look at sales. They're up 14% year over year, 13% year over year. Autoship sales are up 17% year over year. If you compare that number to e-commerce growth in Q2, we outpaced e-commerce growth in the US 2x. We outpaced general pet growth by about 3x. When you look at spend per customer, that's up $70 year over year, and to $470. And when you look at profit is up. So from our vantage point, the team executed well. We had a strong quarter, and we are seeing some pullback on discretionary spend that is correlated with the macro environment right now. Consumables and healthcare categories are super strong, and we're pleased with the progress that we continue to make there. So this is all just playing through the current macro environment.
So talk a little bit more about where you're seeing the softness in demand. What kind of categories? Is it because of higher prices?
Yeah. See, it's mostly discretionary categories, right? Primarily, which is hard goods. So you're talking about, beds and crates. And it's correlated to two things. During the pandemic, the last 2 years, a lot more puppies got adopted. And a lot of pet parents that were staying home engaged and went through this refresh cycle where everybody bought a new leash, a new bowl, a new bed, a new crate, and all of that stuff. And so some of these products have longer refresh cycles. So we need to kind of wait to let the refresh sort of, cycle through. And B, in today's environment, when the consumer is rationing spend, core categories such as consumables and healthcare take precedence over perhaps adding an extra toy, for Casper and so forth and so on. So it's just, it's a matter of respecting the consumer's state of mind right now and making sure that what they do need in this particular time is superior value proposition and convenience delivered on core categories, which we're doing extremely well.
Yeah, I wonder, because it's a bit of a rethink, because what we've heard from lots of companies in your category is that pets are supposed to be recession-proof kind of business. The people have to spend on it no matter what. So how big of a chunk of your business is this discretionary?
Yeah, so, pet has proven to be recession resilient, or has proven to be resilient through the macro, because when you look at pet spending, like industry level pet spending is still up high single digit to low double digit. And, it's actually in terms of dollars that the industry is spending, because pricing is actually playing through a part in that. When you look at Chewy's growth, our growth is not only up in terms of units, so we're delivering structural growth on the back of transactions, as well as, pricing playing a part in that. And we're proud of that. That's hard to do in an environment like this. And, we just have to wait for the macro to kind of cycle through. Because underneath of that, lower pet household formation will actually wean through as we move out of this year and as the macro settles. So broadly speaking, we're seeing kind of, core category trends in the right direction.
The margins were surprised, I think, in a good way. What's happening there on inflation and costs and how you're managing that?
Yeah, Sarah, what you've talked to us for a while, and what you're seeing happen at Chewy is, we're on this mission of getting big fast, but we're also getting fit fast. Because when we look at it from all the way back to the IPO, in terms of the way that we're improving profitability, right, we're delivering disciplined, structural, incremental profitability on a year-over-year basis. So our gross margins have expanded from kind of the 20% ranges in 2019 pre-pandemic to, this quarter we delivered north of 28% gross margins. And at the same time, we've been investing a lot to, redesign and transform our supply chain and FC operations and capabilities that improve customer experience. And you see us deliver leverage. And as we grow, right, and as customers discover us a lot more, we can also give back some marketing efficiency. And as a combination of all of that, the profit curve is continuing to gradually and steadily improve. So we're proud of the work that's going on. And we're actually exposing a lot of this in our earnings call in the way that we're talking to the street and the investors as well.